Can you really use your credit card to get cash? Yes, you can. Should you do that? No, no, you should not. I'm Beverly Harzog, and I'm talking about getting a credit card cash advance. We'll cover how it works, what it costs, and what to do instead. Oh, and there is maybe one time when it's barely acceptable to get a cash advance, and I'll cover that in a minute. Let's get started. So, how does a cash advance work on a credit card? You go to an ATM or to a bank, but instead of using a debit card, you use your credit card to get cash. You do have a limit, so be sure that you are aware of what that limit is. A cash advance could be appealing because you have access to more cash than you might have in your savings account or checking account. But here's the thing, there's a credit card cash advance fee. There's also a cash advance APR that's usually much higher than your regular interest rate. Take a look at this example. You have a purchase APR, which is as low as 19.99%, but your cash advance APR is 29.24%. Follow that red arrow down to the paying interest section. It says we will begin charging interest on cash advances and transfers on the transaction date. Now, that means as soon as you get that cash, interest starts accruing, and it's compound interest. Let's take a look at an example where you get $1,000 credit card cash advance. Let's say you got $1,000 cash advance at 29.24%. Right off the bat, you're going to pay a 5% fee. It's $50, so you owe $1,050. If you wait until the end of the billing cycle to pay that off, and it's usually about 30 days, you will end up paying $25.50 in interest. So by the time you pay this off at the end of the month, your $1,000 has cost you $1,075.50. What if it takes you 12 months to pay it off? Let's say you pay $105 a month. It now costs you $1,220. You paid $220 in interest. What if you also had a $2,000 balance being carried forward from last month when you got the cash advance? This makes it harder to pay the cash advance off quickly. Focus on paying off the highest APR first. Usually the APRs are different, but if they have the same APR, and this can happen if you've gotten a penalty rate, the issuer can actually decide whether to combine balances or keep them separate for calculating interest. Now, the example I gave here includes one credit card, but if you have debt on multiple credit cards, it can get confusing. Plus, balances grow so quickly with compound interest. Are there any other side effects other than loss of money? A cash advance on a credit card also increases utilization on your credit card. Now, this can decrease your credit score. Your credit utilization is the amount of credit you've used compared to the amount you have available. So when you get a cash advance, it increases your utilization on that credit card, and it can damage your score. If you are in a dire emergency, I mean, really, it's serious, it's okay to get a cash advance if that is your only option. If it's something you need, but if you can wait a few weeks, please do that. You can also consider a 0% purchase APR credit card. With a 0% purchase APR credit card, you'll have a 0% interest rate for about a year, a little bit longer, depends on the credit card. That's a much better option if you need a short-term loan, but don't do a cash advance with high interest rate. If you found this video helpful, please subscribe to my channel and leave me a comment if you have questions. I always respond. Thank you for watching, and I will see you next time.